Okay, hey traders, John Howell here from tradinginvestingforyou.com. Obviously anything I do say in this video is general advice only. I don't want you going out there and using what I say as gospel, okay? I want you to go out there and I want you to make sure that you test and see if this actually fits for you. Now, let's get straight into this, what this video is all about. What this video is all about is about probably one of the biggest things that I see one of the things that most people just don't think about while they're trading. And there's a whole bunch of money, there's a whole bunch of managements that we need to incorporate into our trading to make sure that we're giving ourselves the best chance of doing well. Okay, so the first one is money management. Okay, money management, risk management, and trade management. These are the things that we need to improve on as we're going through to be a trader. Let me see if I can do this. It's like half my head here is black, half here is white because of the window just there. So there's a couple of things here. One, there's money management, risk management, and trade management. Okay, there's those things that we need to be really focusing on and really relying on, or should we say, trying to become good at. Okay. As we want to become a much better trader, we need to be focusing more on those things. Okay, so I'm going to be talking today about trade management. Okay, and this is actually a big shout out to Jane. Jane, this actually video is mainly for you, but everyone else is watching this right now. You guys are going to get a good value out of this as well too. The thing about trade management is we've got to understand how the market works. Okay, and if we understand how the market works, then we can get a good understanding of how and when we should be entering, possibly even exiting our particular trades. Okay, and this is probably one of the this is a big crucial key of what I see where most people get stuck when it comes to finding good entry points in the markets. They may be able to draw trend lines, they may be able to understand weekly trend lines, they may be able to understand indicators and moving averages and stuff like that, but they don't actually understand how the market works, and so therefore they struggle and they just don't know how to get good entry points because they're forgetting of exactly how the market works. So in this video, I'm going to go to the charts in a minute. Just behind you is my computer. And we're going to go to the computer and I'm going to show you exactly what I mean by how the market works and trade management rules, okay? And you can incorporate this to any strategy you're using right now. Doesn't matter what it is, but this is exactly how the market works, okay? And once you start incorporating this, you can understand, okay, this is a good entry, this is a bad entry. And once you incorporate this into your strategy, you'll probably find yourself finding and picking better entry signals based on what the market is doing, okay? So without further ado, let's actually get to the charts, which is behind you, and I'll start recording that. And what I'll do is then we'll come back and then we'll wrap it up. So let's get into the chart. Okay, so let's get into the charts now. Let me show you what I mean here. If we understand how the market works, this is quite an intensive sort of subject, and we could spend probably half an hour on this, but I'm not going to spend too long. If we understand how the market works, the market's either going to stair-step up, okay, stair-step up, or it's going to stair-step down. Make sense? So if we know that's how the market works, okay, if that's how the market works, then what we want to be doing is we want to be getting in on here, not up here. Makes sense? And then we wait for a pullback, and then we wait to get in on here. We don't ever try to pick the bottoms because we can't. On a downward movement, we want to be trying to move down, come back up. We want to be trying entering here and entering here. Makes sense? We don't want to be getting in on a downward movement down here or down here. Now, Jane, the entry that you showed me that you did on SPRD was right here. Okay, was right there. But Jane, the thing that what happened here is this. We've already had, this is 1, 2, 3, a big sideways day. Sideways, up, sideways, sideways, up. So can you see how we really haven't had a pullback? That's just been consistent. 1, 2, 3, 4, 5, 6, 7, 8, 9 up days already in this move. Remember what I said at the start, right? The market's going to do this. So it's actually less probability entering because you actually entered all the way up here after the move already ran. All right, we want to wait for a pullback
and then possibly get in on here. See, right now where the market is, right, the market's pulled back. The market's pulled back to a potential support level. Okay, now I'm not saying this is an entry level, but now this market's had a big run up. It's already ran up, and now we're having a pullback. If we do get a bounce here, then that may be an entry signal. I don't know. I'm not saying it is, but I'm just saying that may be an entry signal. But by getting in on here, we are getting a much better, clearer entry signal based on what the market is telling us. Okay, so once again, what you did, Jane, is this. Remember, the market does this, okay? And there's this example, the market stair steps up. We always want to try and get in on down here and try to get in on down here. What you did is you waited for the market to move up so much, and then you got in up here. And then the market reversed and you got stopped out. That's what most amateur traders do. They wait for the market to move up so much, and then they get in. Yes, it did break resistance and so on and so forth, and we did have some sideways bars and stuff like that, but we really didn't have any pullback. Now we've had a pullback, it's much higher probability to get in here. Make sense? So you don't want to be getting on here because we just don't know how long the move's going to last. We don't want to be getting on here because remember, the move's already gone. Okay, we want to be getting as the move starts. As an example, if we got a little up bar here, this entry here would be so much more higher probability than this entry here. The only reason why is because this move has already happened. We've already had so many up bars, and this move has already ran up so much that there's just no real good example to get in there because the market's already moved. And by understanding that the market runs and then pulls backs and runs and pulls backs, so the best chance to getting in is as the market stair steps, as in here. This may be a much better entry signal because we've had a pullback first and now the market's run up. Try to enter in on here because as the market stair steps up, that's a much better entry signal. If the market's moved 3 or 4 or 5 days up in an upward movement, then as you put on here, then the trade is over for me. You don't get in because you don't know when the pullback's going to happen. Okay? I hope that makes sense, Jane, but please don't ever get into a trade after the market's moved 3 or 4 or 5 days in an upward movement because remember, the market runs up and then pulls back. You're getting in on up here basically when it's basically now due for a pullback after it's had a big run. And then you get in on here, you get out here, and then guess what? And then steps back up again. Okay? Alright, so I hope that makes sense. I hope you now understand, Jane, that please don't ever get in on after the market runs up. Get in as the market pulls back, and then we're looking for the stair step first. Don't ever get in after the market runs up. I hope this has helped you guys, and I hope this makes sense.
Okay, so we're back again. Now, do you see what I mean there by how the market works? Remember, the market is a continuous stair-stepping movement, right? The market is always moving, it's stair-stepping, it's either going sideways stair-stepping, it's either stair-stepping up or stair-stepping down. There's a lot of different things that the market can do, but to increase the probability of your entry signal, it's important not to enter as the market's already ran up, especially when you're trading a daily chart. And Jane, especially for you, as you can see what I mentioned on there, on the charts, that where you entered was like, probably about a good, maybe 6 or 7 days into the upward move already. So you can see how that move is already likely to be exhausted. Because remember, we want to be getting in as the move's starting, not as the move's already extended. Make sense? So that's probably one of the biggest rules out there that I can say when it comes to trading the markets. When you're trying to trade the markets, have good trading management. What is good trade management? Good trade management is understanding that the market will stair step. Okay, the market does run, the market does pull back. Now, knowing that, we don't want to be getting in after the market has ran 3, 4, 5, 6 days. Okay, after the market's ran up a fair bit, then we are now getting into a situation where it's due for a pullback, right? Because we've already had a big stair-stepping movement. Make sense? So because that's happened, we've now stuck the odds on our side, or stuck the odds against our side of having a successful trade, only due to the fact that we got in as after the market already ran up. And that's what most amateur traders do. They'll wait for the market to go up, 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 and up, and up. And then what will happen is the market is likely to pull back, they're likely to get stopped out, and then the market's likely to continue on up. Makes sense? So trade management is important. We're waiting for the pullback first, and then we're trying to see if it does pop up. This is a better entry because it's had its pullback and moving forward. It's extremely important that if you're looking for good entry signals, that you don't get in after the market has moved up 3 or 4. Anything after 3 or 4 days for me is the move's gone. Makes sense? So if I'm trying to get into a long entry, meaning I'm trying to buy the market, and the market's already gone up 2 or 3 or 4 days, and it's moved up quite a bit, and not 3 or 4 days, then that tells me that move's already gone. Make sense? I've just seen that. My video's freezing on me. So does that make sense? So what we want to be doing is we want to be in a situation where, as I move my hands to that, freeze. Freeze, freeze. It doesn't freeze anymore. What? The camera's freezing on me. So does that make sense? We want to be getting in before the move happens, okay? So if you're trying to get into a trade and you watch it and you're thinking about getting in, and then suddenly what happens is suddenly, you know, the move goes 3 or 4 or 5 days into the move and it's already moved up, then you've missed the opportunity. Because what's likely to happen is you may get in, it may go up for another day or two, but you're likely to see a pullback because it's already moved up quite a bit from that turning point. Make sense? Okay, well, I hope this has really helped you. I hope you now understand that this is the trade management rules that we need to be sticking by if we want to try and find good, high-quality entry points. Number 1, try to get in before the move happens. Number 2 is if we see 3 or 4 or even 5 days move and good, solid movement, then the movement has already been done, and therefore we have a less probability of having a successful trade. Okay, so these are the trade management rules. If you like this, come on down to tradinginvestingforyou.com. And Jane, I hope this really helps you out. Okay, I hope this now helps you out. So anyway, this is John Howell here from tradinginvestingforyou.com. No matter what happens, say this to yourselves every morning, every afternoon, and evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.